thanks for joining us, Jake.
Yeah, of course. Thanks for having me.
Yeah, this is Jake from Aries Mortgage. He's one of our favorite lenders to partner with when we're working with our clients because we know he takes the best care of them. So let's just jump right into it, shall we?
Let's do it. Yeah.
Let's bust some myths. Jake, a lot of people think that you need 20% down to buy a home. Is that true?
Actually, it's not true. In some cases, you can put 0% down, actually.
Wow.
Yeah, certain loan programs out there will allow us to get you into a house with no money out of pocket for the down payment.
Is that only for first-time home buyers, or is that can anyone qualify for that, typically?
There are some for first-time home buyers, but there's definitely programs out there for people buying their second home, third, fourth home, whatever that might be. Yeah.
Cool. I had a client that closed last year who, while we were sitting, she was a buyer, and while we were sitting at the closing table, the title company asked her for her bank account information because she was actually getting money back because she used a grant program, which is actually really cool. So she put 0 down and actually made money on the purchase of her home, which I thought was really not something you do every day.
In certain circumstances, every buyer puts earnest money down, and depending on the loan program and the situation, they could potentially get their earnest money back. So that would be an example of getting money back on your home purchase.
It's amazing.
Yeah.
Okay, a lot of our viewers feel like they have to be totally debt-free or have a perfect credit score to even talk to a lender. What's the real story there?
I would say that is definitely a big myth. In fact, you should probably talk to a lender to figure out where you stand with credit, debts, income, any of that stuff. And you can probably qualify for more than you think. And if not, if you're speaking with a lender like myself, I will put you on a game plan to get you to where you need to be as far as purchasing a place.
But is that annoying? Do you get annoyed with people that do that?
No, actually I welcome it. Okay. I love to educate people. So any chance I can do that, get people in the right direction. It'll help them get to their goals at some point. It doesn't have to be tomorrow or next month, but as long as they have the information, I think that's powerful for them.
I totally agree, and that's one reason we love working with Jake is because he's so good to help walk our buyers, especially first-time home buyers, through just the whole process. So
yeah,
we love Jake. Can you walk us through the mortgage process step by step, like from I think I might want to buy a house to getting pre-approved and through the whole thing? What does that look like?
Yeah, so your first step should just be to contact a mortgage professional to help you figure out where you stand currently. And after getting questions answered, you probably get the application process done. You turn in your documents. There's going to be a handful of documents that every lender requires to get you pre-approved. So once we have everything in, we'll be able to analyze that and issue what's called a pre-approval letter. Mm-hmm. And once you have that, you'll get with Jordana and get out and start shopping for houses. With that pre-approval letter, you're more confident in knowing what you can afford, what you can qualify for, so that you're not out looking at a $1 million property and you can only afford $500,000.
Yeah, and sellers are much more likely to actually entertain your offer with the pre-approval letter.
Absolutely.
As well.
Yeah, and then once we're under contract, from there we'll work through additional items that might be needed for underwriting. Once we get the clear to close, schedule the closing and sign all the paperwork to get you into your new place.
Ugh, the best.
Sounds really easy, right?
It's so easy.
Yeah.
More people should do it. Okay. What is one common mistake that you see first-time homebuyers make when it comes to financing, and how can people avoid it?
Just one?
Pick your favorite. What are your favorite mistakes?
I'll mention two. So I think that first of all, avoiding talking to somebody just because you think you can't qualify, whether that's credit, income, employment, any of that stuff. And then as you're going through the process, a common mistake we see is financing things for the home before the home's actually yours. So that can be a pitfall for people. RCULE's having a big sale, let's go finance a fridge or a bed or whatever it is. So making sure that if you need to do that stuff, consult the mortgage person first, just so that it doesn't prevent you from getting a house.
Because that plays into when they're doing all the underwriting, they'll see that.
Yeah, the debts that you create will play into your qualifications. Yeah.
And we always walk through that, like, we're not going car shopping now.
Yes.
Want to be clear that this
Treat yourself after.
Yes, yes.
Mm-hmm.
Okay. Let's talk numbers. If
Love
someone is paying, say, $2,000 a month in rent, what kind of buying power could that translate to?
You want it dollar for dollar, 2,000, like
Yeah.
a mortgage payment?
Yeah.
Okay. You're probably somewhere in the $300,000 purchase price range to get your payment right around 2,000 per month.
And how much of that is dependent on the rates? Is like that's
A big part of it will be dependent on the rates. I mean, obviously, there's a bunch of things that play into your monthly mortgage payment.
Mm-hmm.
But yeah, a big portion of that is going to be your interest rate and how that impacts your actual mortgage payment.
Okay. So if interest rates were lower,
yeah, obviously, if we could get interest rates a lot lower, we'd love them back in the
that's
threes,
the goal.
right? But
Okay.
that's why it's so important to chat with somebody like myself before you go and get excited about whatever house it is, so that you know what the numbers are and you're comfortable with them. Yeah.
Yeah, I agree. Okay, what advice would you give someone who's feeling like buying a home just isn't possible for me right now? What is one small step that they could take today to make it happen?
A small step would just be to monitor your credit report. I mean, there's lots of small steps, but that's a big one I see is a lot of people don't know what their credit score is, what's on it, anything that's impacting them. So even getting a free service like a Credit Karma or monitoring it through a credit card that you have or your bank, that would be, in my opinion, a really good place to start, just so you're familiar with what's on your financial profile.
Okay. And just to go along with that, do people, and I think we kind of already answered this, but do people have to be completely out of debt?
No, you don't have to be completely debt free.
Okay.
Having lower debts obviously is going to help with the affordability of the mortgage, but you don't have to be debt free. Even if you feel like you need to pay everything off, that's where talking to somebody like myself can give you a better idea.
Absolutely.
On whether or not you need to pay off the credit card or the car or whatever it is.
Okay. Is there anything that surprises your clients once they go through the process, like things they didn't expect or wish they knew sooner?
I would just say how easy it is, honestly. It's definitely a big stressful thing. It's the biggest purchase you're going to have, but as long as you have a good team in place, between the real estate agent, the loan officer, and the several other people involved, it makes the process seem a lot less stressful and easier than you might have thought.
Totally. And I think that's big. I mean, even when we bought our first house, it was like, wait a second, that was surprisingly easy. Like, anyway, I'm always shocked by that every transaction we do. Okay, well, let's talk about interest rates. That's what people want to know about.
Okay.
We've seen a lot of headlines lately. Should buyers be worried, or is there more to the story?
Should they be worried about rates being as high as they are or going higher?
Yeah.
Any of it?
Yeah. What's your take on rates?
My take on rates is that they are what they are. That's probably not necessarily what you want to hear, but as long as the monthly payment makes sense for you, the rate's going to be what it's going to be. And so if we can figure out what your comfortability level is with the payment, the rate is going to be what it's going to be, and then we can refinance later to get your rate lower to help you feel like you can afford it more. As far as what rates are doing or where they're going, I think a lot of that is being impacted by what's happening in the economy between the tariffs and
For sure.
The stock market and things like that. So the good news is, at least for today when we're filming this, with the stock market not doing so well, it actually helps interest rates.
So what are interest rates today?
So on a 30-year fixed mortgage conventional, I looked at it just this morning, and we were sitting at a 6.5% on a conventional fixed rate. If you want to look at FHA, an FHA loan, you can probably get it at 5.75
Wow.
on the rate today. Yeah.
Do we want to dive into that? Why are FHA rates lower?
FHA rates are going to be lower because it's a government-backed loan program.
Mm-hmm.
So the FHA, because of their things like their mortgage insurance and how it works compared to conventional, you're going to have the opportunity to have a lower interest rate on that type of loan versus a conventional loan.
Okay.
I don't know how much detail you want me to get on that.
I mean, I think we need a whole other video just on the difference between FHA and conventional.
Yeah, that.
So we'll do that.
Okay.
Okay. What are some creative or lesser known programs out there that can actually help first-time home buyers get into a home sooner?
Creative programs, probably some of the zero down options. That can be a big barrier, is having a really big chunk of money to put towards your down payment. So knowing about things like grants, down payment assistance, or just zero down home loan options that might be specific to a certain area that you're trying to buy, but that can help people get over that particular hurdle.
Okay.
As far as getting into a home.
Cool.
Does that answer your
Yes.
question
Oh, yes,
on that?
yes. I was
Okay.
just thinking more of, yeah, I just was going down the rabbit hole, you know.
I could talk about a bunch of stuff there.
I know. That's why I'm like, I feel like each
like
of these
rate
questions need a
buydowns
different video for, because rate buydowns is what came to my mind first is. Right.
Okay.
And especially if you can get sellers to contribute closing costs to do that.
Yeah, I mean, that's a good point. If you find a seller that's willing to contribute closing costs, or you have an awesome agent who can negotiate that for you, that can be a creative way, whether that's permanently buying down your interest rate, which is a one-time fee that gets your rate a little bit lower, or you can look at a temporary rate buy down as well, which is basically your rate is lower in the first couple of years than it would be otherwise. So you're making a lower monthly payment for the first year or two, typically on a temporary rate buy down.
Okay. So, what do you recommend when people are like asking for closing costs? Like, how much do you need to work with to get their buy downs?
I would say if we're trying to do just a permanent rate buy down, a good number to shoot for is probably like $10,000.
Okay.
If you want it to cover all of the closing costs and standard fees, that's usually between $6,000 to $8,000.
Okay.
And I can break that down into what that looks like.
Well, and I'm sure every situation is so different.
But anything on top of that is going to go towards helping buy your rate down. So it's not always the same exact amount of money to get your rate down to a certain point. It depends on where the market's at. But I would say with $2,000 or $3,000 to go towards the rate down buy down specifically, you can get your interest rate probably 1/4 to 3/8% lower.
Okay. For $2,000 or $3,000. Okay.
Yeah.
So what about a 2-1 buy down, like a temporary buy down? Are those cheaper, more expensive?
Yeah. So the unique thing about those is that you're front loading the interest and having the seller pay for that interest for the first couple of years, typically on that. So that being said, it's more expensive to do a temporary rate buy down, typically. So let's take a 2-1 rate buy down specifically, where you're having the interest rate 2% lower in the first year, 1% lower in the second year.
Okay.
Essentially, the seller is helping you cover the interest for those first 2 years.
Yes.
So depending on the house, let's just say a $400,000 house in this example, to do a 2-1 rate buy down, you're probably going to need $8,000 to $9,000 just for the temporary rate buy down. Yes.
So then you're going to want to ask for closer to $15,000 or.
Correct. If the situation allows it, yeah.
Okay. I was going to say, then we get into the weeds. We're getting into the weeds.
There's caps on how much you can ask a seller to cover, but yeah, you're going to want to ask for quite a bit more in that scenario if you want it to cover everything. Now, if you want it to just cover the temporary rate buy down itself, you can just have them do the 8,000 to 9,000.
And the pros for that is that you can buy it down much more, because you can buy it down the 2, right?
Mhm.
2 points lower.
Correct.
Rather than just the 0.25%.
Right. So if we're talking about the rates today, where I mentioned a 6.5% on conventional, for the first year you're paying on the rate as if it's a 4.5%.
Yeah, which is incredible.
Yeah, it saves you somewhere between $450 and $500 per month for the first 12 payments.
Yeah. And that's appealing to people because a lot of times people plan on like, oh, well, next year we're getting a promotion, or, people tend to make more money.
Exactly, yeah. As you get farther down the line, you're going to make more money, cost of living raises, maybe you're getting into a new career, graduating school, any of that stuff. So the idea is that you're going to make more money while you're waiting for the payments to potentially increase.
Yeah.
And then there's obviously always refinancing as an option to get the rate lower.
We date the rate.
Assuming.
We date the rate. We marry the house.
Absolutely.
That's my saying. Okay. That was kind of a rabbit hole. Sorry about that.
That's all right.
What are some... We've already done that one. If someone's self-employed, since we're just getting trickier here for you.
Yeah, we are.
Or works... If someone is self-employed, what do they need to know before applying for a mortgage? Because I hear a lot of times, being self-employed, it's like, well, you have to wait a certain amount of time. You have to, there's like creative things you have to do. So.
Yeah. So being self-employed, ideally, you'd probably want to know you're going to buy a house well ahead of time. I know that's not always how life goes, but the reason for that is because with business owners, if we're trying to do a standard loan and have manageable loan terms, they have to be self-employed for a period of at least 2 years, meaning they've filed taxes on their business for at least 2 years.
Okay.
The reason for that is because a lender's looking for stability and they want to know what's predictable as far as your monthly income goes. And so they feel like after 2 tax filings or 24 months, we can get a good idea of what that monthly average actually is.
Yeah.
And it's not based on your gross sales or what you bring in. It's based on how you file your taxes and what those deductions are. So there's certain things that we can add back into your income to adjust it after your deductions. So I think the best thing to do there is just talk with a mortgage person or find a CPA that is familiar with the mortgage process and knows what they should and shouldn't deduct or write off on your taxes.
For sure.
Yep.
So when they're looking at the last 2 years, is it advantageous to wait more than 2 years? Because typically it's like, okay, I'm self-employed, I'm starting my own business. Like maybe the first year doesn't do so hot, right? So it's like, well, if you made, $3,000 a month the first year and then $6,000 a month the second year, does that just kind of average out, or how do they look at that?
Yep, it would average out. So they're going to take the last 24 months and find out what the total amount we can use for the income is, and then they'll divide it by 24 essentially. So spread it out over the 24 months.
Yeah. And
that gives them a better monthly average. So if you can help it, potentially waiting longer could increase the amount that you can qualify for.
Yeah, if you want to buy higher, I guess.
Now, if we're talking to somebody who's owned their business for 5+ years, but for whatever reason they haven't purchased a home yet, in that situation, we can use the most recent year of tax returns by itself to qualify. So let's say your first 4 years, you were writing a bunch of stuff off, or maybe you weren't making as much as you'd hope, but the most recent year you crushed it, and you're making $8,000 to $10,000 a month or whatever it might be. If you've had the business for at least 5 years, 5 tax filings, we can just take a 1-year average at that point.
I didn't know that.
Yeah.
Wow, I'm learning everything new. I'm learning things
dropping nuggets here.
Dropping some truth. Okay, well, let's do a speed round. On our channel, we like to do speed rounds where we ask questions and you just shoot your answer, first thing that comes to your head. Okay. All right. What's your favorite movie of all time?
Wedding Crashers.
Ooh, Okay, good. I was gonna say fast. Okay, I've never seen that. Is that
No?
funny?
Yeah.
Okay.
That's
Who's in
why I
that?
love it.
Who's in that?
Owen Wilson and
I'm in.
Vince Vaughn. That's right.
Vince Vaughn. Okay, I'm in. Let's watch it. Okay, if you weren't a mortgage lender, what job would you be doing instead?
That's a great question. Baseball coach.
Oh, you like baseball.
Mm-hmm.
Wow, fun. Okay, what is one guilty pleasure you can't live without?
Red Bull.
Oh, is that your go-to energy drink?
No, that was just the first thing that came to my head.
I know when Jared did an interview with me, I said dumb things. Okay. Well, thanks for your time today,
That's
Jake.
it? That's all the speed round?
This has been. I know. I was gonna
Okay.
say this isn't very much speed round.
That's all right.
It's just 3.
Okay, should I come up with more? Let's come up with more. Okay. Rapid fire questions. If you didn't live in Utah, where would you live?
On a coast somewhere. Probably
West or east?
east. North Carolina. If you want to be specific.
Banks.
They're beautiful. Outer Banks is beautiful. Oh,
Lots of golf. Good weather most of the year.
yeah. Okay. Go to restaurant for a date night with your wife.
Super Chicks.
This is fun.
Yeah.
I like the speed round. All right. Well, thanks for your time, Jake.
Yeah, of
Well,
course. It
we'll
was a
hit
lot
you
of
up.
fun.
We'll hit you up later.
Okay.